Welcome to the Board of Advisors podcast. We're here for our Q1 summit. We are here at the Ritz-Carlton Las Colinas in Dallas, Texas. I am here with James Cordier, the Commodity Options Maverick, and we're going to talk about his work and get some good insights that I can honestly say we wouldn't receive from anywhere else. So let's get down to business. You are known as the Commodity Options Maverick. Tell me a little bit about how you came to be in this kind of role.
Cheryl, it's truly a pleasure meeting you here in Dallas this week, and looking forward to all that is BA. The Commodity Market Maverick, I wasn't sure exactly how that took place. Someone just said to me, like, James, you know you're the Maverick, right? And it's like, well, I guess I am. I kind of like the word Maverick and what it sometimes implies. Interestingly, we just had something come up. We were on CNBC Dubai about 2 weeks ago, and perhaps this is where the word Maverick comes from. As a lot of viewers and listeners know, the commodity market has really been on an incredible roll this year and end of 2025. And gold prices and silver prices and platinum prices reached all-time record highs. And when CNBC invites you on, you usually know maybe 6 to 10 days in advance. And prior guest appearances on CNBC Dubai, I was talking about being bullish on gold.
Right.
And gold was at $3,500 an ounce and $4,000 an ounce. And I kept being asked, James, where's the pullback so our viewers can get into this market at a lower price? And I said, I don't think there will be one. And I think you just need to jump in, put your tuxedo on, the water's warm, and get involved. And which is a difficult call, because when gold prices are already at all-time record highs, and you're saying things like there won't be a pullback,
right?
Perhaps that's a little bit maverickish. But even more so, about 3 weeks ago, we were invited on again, and you're invited several days in advance. And I'm watching something called open interest.
I'm fascinated with that.
And open interest tells us, and any of the viewers that want to do a little bit of research for themselves, it tells you who's buying.
Right.
Okay, is it strong hands that are getting involved with gold and holding it for the long term? Or is it weak hands that are perhaps being chased out of bearish bets? And anyone who does want to do a little bit of research on this can decide this and understand it for themselves. Open interest is the number of contracts at any of the exchanges around the world. This one particularly is the CME in the United States. And what it told us was the 6 days of the end of the gold market rally was all on bearish bets that had to cover their positions. So these are not strong hands buying the market.
That was insight.
That was insightful. And I tried to explain it the best I could through my interpreter in Dubai. I think she did a very nice job. But interestingly, I said for the first time in over a year that I think now is the time to let gold go, ring the register, and expect lower prices in February and March. And by gosh, if this Maverick doesn't jump on CNBC in Dubai and say this is the top of the market.
You said it out loud.
And by gosh, if that wasn't the top of the market, the next 3 days, gold and silver had the largest drawdowns in price in history. So maybe that's where the Maverick comes from. Maybe it's the lucky Maverick or the smart Maverick, but either way, perhaps that's where that comes from.
Well, you seem to call it with amazing frequency. Not that that's the core of your existence, but it sure doesn't hurt.
A little bit of timing certainly does help. Investing can be tough, and trading commodities that have been breaking records isn't perhaps for the faint of heart. But if you learn personalities of the different markets you've been trading for so long, and maybe that's what we have a little edge in.
Or a lot of edge. I find that interesting. And people, of course, watch you with great regularity and interest for those very insights. But I'm curious now, what caused you to be more fascinated with options than with stocks?
Interestingly, when I was very young in the business, I thought I was going to be a stockbroker. I was very interested in that. I come from a very small boating and yachting community in Wisconsin. So I was familiar with boats and freighters that were leaving the port that were being created in this really small community. And these boats would leave forever. And I thought there must be a really big world out there. So I was fascinated with raw materials because that's what I was watching happen in our small community. And I was a coin collector as a young lad, and I was amassing a huge silver hoard, or at least I thought it was a huge silver hoard. And the Hunt brothers were kind enough to run the price of what I've been collecting for years from $5 an ounce to $50 an ounce. So what a cash in for that didn't hurt at all. That beat the heck out of paper routes and shoveling snow for money in Wisconsin. So I thought to myself, this is really for me. This is fascinating. I'm turning my childhood hobby into a lifelong passion. And that's how I got into commodities versus trading IBM or McDonald's.
Interesting.
Yeah.
Well, commodities are really, they're the core materials of our world, our culture, our society, everything. So I think that that's apt.
Yeah, they certainly are. Everyone is so AI driven right now, and they can expect, well, we'll just push a button and all this infrastructure is going to get put in place. And that's not the case. You need copper and silver and aluminum and all these different things. So people are learning about raw assets now, probably more than in the past.
Yes, they are. And now, approximately 3 decades into this career, you've seen it all. You've seen booms, you've seen crashes, you've seen everything in between, volatility spikes. So, and in fact, you've written the book, The Guide to Option Selling, now in its 3rd edition with McGraw-Hill. So with that much expertise, but what do the markets teach you over time that a book can't?
You know, there's lots of books on trading commodities or trading options. When you are sitting behind your desk and writing about how it works and how investors might take advantage of it is far different than the boots on the ground and hard-earned experiences.
Yes.
Over 30 years of trading soybeans during a drought or silver during a squeeze or coffee prices when there's a drought in Brazil. Hard-earned lessons and lots of experience is something that you can really take advantage of versus just reading a book. Having the hands-on trading experience is something you really can't get in a classroom, and I welcome anyone who wants to try it. It's fascinating.
Well, speaking of hard-earned experience, having gone through all of this experience in so many market conditions, how has your attitude towards risk shifted and evolved over that time?
Cheryl, I can't help but tell you a story.
Okay.
In 2015 and 2016, our business is just booming. Our 3rd edition of the Complete Guide to Option Selling was just released, and we're on CNBC every other week, and Bloomberg is calling us to come on TV and so on and so forth. And as a boutique firm in Tampa, Florida, we are having basically a wait list for investors to perhaps become clients of ours. And to tell a high net worth investor that you can't speak to Michael or David or Rosie for 30 days, they're not really used to that. But the fact that we were a boutique firm, we were delivering alpha, not all the time, but practically every year. And we had a long waiting list, and we were just doing exceptionally well. Selling options on commodities slows the market down. So you don't have to be predicting it day by day, like we got really lucky on CNBC.
So there you go. There's some advantages.
There's some advantages. And basically, we are utilizing the strategy of option selling on commodities. So instead of trying to predict tomorrow or next week or next month where the price is going to go, we're taking our 3-decade experience of knowledge of learning these commodities, and I'm going to say it, betting where the market's not going to go, because that's what you're doing. Whether you and your broker are buying NVIDIA, you're betting on it to go up, or whether you're selling options on coffee at strike prices 200% above the market, you're betting. Interestingly, before a client became a client, they never spoke to me. They would always speak to one of my colleagues at the office. And generally speaking, they've had all their questions answered and they're very comfortable with the investment. They've done their due diligence and so on. And in 2016, 2017, we're having investors come in like every other day. And my colleague Michael would say, well, before we start investing your hard-earned money, you'll have any questions or any time you want to speak to James. I'm the head strategist at the company. And often, Mr. Johnson from upstate New York would say, James, I really don't have any questions. Michael and Rosemary were very good at answering everything.
Right.
But before we start investing, I do have one question. And I couldn't understand why I kept getting the question, James, I've done the due diligence on your company. I think the investment's very sound. I like the approach. But have you had your crash yet? And I said, what do you mean by crash? Exactly. And Mr. Johnson would say, have you ever lost it all? It's like, well, no, I haven't. And the call would kind of go silent, and Mr. Johnson wouldn't have any other questions, and we would sail on down.
Away.
Yeah, exactly. A week or two later, I'll get another phone call, prior to trading, and son of a gun, if it's not the exact same question. And no, I've never had my crash. The phone conversation ends, and we go on our way. And there was one that was really memorable and instrumental to me. Someone in the medical field had just one question again. And he said, James, generally speaking, after we do due diligence like this on a firm like yours, and we're placing money, we usually invest $2.5 million to $5 million based on what we think is a good starting point. And he said, but you haven't had your crash yet, have you? I heard you haven't. I said, no, I haven't. He goes, well, instead of investing $2.5 million, we're going to invest $250,000 to see how you do. And it just resonated with me that you have to have your crash. You have to lose it all, unfortunately. Going forward, we're going to always keep that in mind. And I think our crash that we did finally have does make us, a much wiser, smarter, risk-averse company than we were in the past.
Well, that's good. And you are part of a long list. I looked it up. Yeah. Greatest crashes in history. And gosh, the ones that even made the chart, the lowest amount on that chart was $1 billion, and it was Warren Buffett.
Yeah.
So everybody has that experience. Some publicized better than others, but everybody faces it. So you did.
I've had mine.
You've had yours. That led to your book. The other book.
Yes.
I'd like to hear a little about that. The Forbes book.
Okay. Reflections of an Option Seller, is exactly that. It talks about my journey from coin collecting in the early days to, building a really nice boutique company where we invited high net worth investors, delivering them alpha. And it really walks everyone who wants to read it right through the crash that we had.
Oh, I will say that unlike the other book, this is a page turner.
Yes.
I couldn't put it down. And it's the real lived experience that makes it really memorable, I think.
Yes.
So.
We've been told that The Complete Guide to Option Selling is the best investment book that these investors have ever read.
Right.
But it is not a page turner.
No, it's a reference book.
It's a reference book, exactly.
Yeah.
There are some favorite chapters in that book that are page turners, but for the most part, the 350 pages, they kind of turn kind of slow. But basically, my biography, I think perhaps is a little bit more interesting. And it takes a reader all the way from the very beginning through my crash and now through the other side. People like Ray Dalio, who I'm a huge fan of, he's trading and investing for people. He's well into his 70s. Yeah. I'm going to do this forever. So I have another decade to go doing this, and having my crash behind me, I think makes this a much easier
what
space
I'd
to be
really
in.
like to know is, how does your practice and methodology look now that you've had that experience versus before?
Okay. That's a great question. Everyone always says that's a great question when you're on TV, but that is a great question. Our company was optionsellers.com.
Right.
Our new company is optionspreaders.com, and spread is the magic. Spread is the ability to hold your risk at a very tight level, to understand what the possible downside might be. And now with every trade, with every investment we get into, no matter how sure we are that this is going to be a great outcome, we have insurance on everything we do. This slows down the market even more.
Right.
And generally speaking, and we've now had 1 year of trading in this fashion, I was thinking to myself that we're not going to be able to perhaps get to the returns that a lot of our clients are looking for if we're always spread. And pleasantly surprised. We had the tariff tantrums last year in April.
Tariff tantrums, I like that.
We had a lot of things going on. The spreading that we did and the new structures that we built for our clients withstood even last April. And
very interesting.
We had positions on in coffee, and we had positions on in copper. And these are the big tariff tantrums that were taking place.
Affected.
And by gosh, if our new strategy didn't produce alpha last year, in one of the most challenging years that I can remember. So the changes that we've made to being spread on everything we do passed with flying colors the first year. And we're looking forward to 2026 and beyond doing the same.
Well, come to think of it, it was probably the very best year to put the acid test on this strategy. There was everything.
It certainly was.
Unpredictability was the rule of the day.
That was the most volatility I think I've ever seen. And we had very tiny drawdowns during them because of the spreading that we did.
You probably slept better at night than most people.
Yes. As it turns out, the spreading does do that for you. And it worked and delivered alpha last year.
That's great.
Yeah.
So you understand risk and you also have supreme respect for it.
Yes. A crash, while everyone wants you to have one and they hope that you had, that is quite an experience. Ray Dalio, in his book Perspective, he said it's kind of like having a sledgehammer hitting yourself in the head. That's how much it hurts. And boy, you don't forget that feeling.
You never forget.
No.
That one stays with you. It left a mark.
Yes, it did.
Yeah, it did. So back to commodities, your focus on commodities, energy, metals, agriculture. Why do you view commodities as such a clear window into what's actually happening in the global economy?
That's interesting. A lot of people are trying to understand, well, what did the GDP say this past, or the CPI, or what's the Federal Reserve going to do? Sometimes bullish news is bad for the market and bad news is good for the market. Understanding what the value of copper is, or understanding what the demand for oil is, can give you a much better snapshot of how the global economy is doing, because it's just absolutely usage that is determining the supply and demand of these different commodities. And that will give you a much better gauge, not every time, but quite often, of the underlying strength or lack thereof of global economies.
So you get perspective that really isn't available in other ways. I guess people could adopt your methodologies and have similar insights, but they don't. Who do you trust most? You know, the traders, the market dignitaries. Who do you trust most?
We had something come up, I think it was in January, so just recently. And Venezuela was taken over. And of course, they used to produce 4 million barrels of oil. And everyone was like clapping their hands. It's like gasoline's going to be down to $1 a gallon, and we're going to get an extra 4 million barrels a day. One large investment bank after the other kept saying, wow, this oil market's going down. We're looking at much less demand in 2026 and 2027. Now we have the extra supply coming on. Our figures just did not coincide with that. Goldman Sachs, for example, they trotted their oil expert out on all the different stations. And he said, oil's, it's going towards 50 and below, and it's going down to 45, and here's why. And about 2 days after that, the market just went straight up. So whether it's Goldman Sachs or Barclays or anyone else, commodities have a personality. And when they're supposed to be doing this based on economic numbers or production figures, and it's not, you've got it wrong. And the biggest banks in the world got oil wrong this past year. And how that happens, I'm not sure. They have all the resources in the world. But come to think of it, that young man looked like he just got out of college. And there's nothing wrong with that. Everyone has to just get out of college. But I don't think his department had a ton of experience in oil because they just got it dead wrong. And
very interesting.
It is interesting how that works.
Well, and you have the Cordier Commodity Report, which I love. I think everyone should be watching. You're putting out weekly episodes. So I think that's a very worthwhile thing. Another way for you to engage, and here at Board of Advisors, what is the greatest... what are the greatest things that you bring to the table for the membership here?
B of A, I'm just so delighted to become part of right now. I'm very happy that I was invited to this community. A lot of people here, I think, and I'm relatively new, I think we have some synergy. I think we have mutual interests in different things. And so often the average investor is long real estate, meaning they own their home or other property. They are, of course, long the Mag 7, like NVIDIA and Apple and so on. And I think everyone realizes that the stock market doesn't always go up. I know it's been on just a great streak for the last decade and what have you. But generally speaking, when the stock market's at all-time highs is usually the best time to diversify your portfolio.
That's right.
Unfortunately, most people have the stock market fall 20% and they call their stockbroker and say, we got to get diversified. This is ridiculous. Well, chances are that's probably the time to double down on your stocks. Exactly. It's not the time to diversify. But I think that's what we bring to the table is a lot of knowledge about a different asset class. A lot of investors are familiar with the 60-40 rule, 60% equities and 40% interest accounts. And we think that after 2025, that the new allocation might be 60-30-10.
Interesting.
And the 10 being commodities.
Yeah.
There's, Cheryl, there's $37 trillion in debt the United States is holding.
Absolutely.
And to turn some of those dollars into hard assets, I think a lot of people have, really warmed up to. And I think
a lot of people agree.
Yeah. And I think a lot of people are going to be doing that for years to come.
Good. And so for the people who want to follow you, where is the best place to go?
Well, there's a couple. There's jamescordier.com.
Right.
There's Cordier Commodity Report.
Right. CNBC.
There's CNBC. Bloomberg.
There is that.
Yeah. There certainly is. You can contact us in several different fashions. The Complete Guide to Option Selling is just a fascinating investment book.
It is.
And then, of course, Reflections of an Option Seller.
The personal story
to go alongside. The personal story. Yeah. Maybe
package deal.
Package those together, and one will help you turn the page on the other.
There you go. I like it. Well, thank you so much. And for those of you watching, we hope you enjoyed today's episode of the Board of Advisors podcast. So please take a minute, comment, like it, subscribe, and find us on social media. And remember, when you get in the right room, anything is possible.
Awesome. Thanks, BA, and thanks, Cheryl.
Thank you.